Hi everyone, this is Rohit from Lifestyle Mastery, and today I'm excited to have Harvey Liu, who's the CEO of LeveX Exchange, where he's building a cutting-edge platform for spot and future trading in digital assets. He's done his MBA from INSEAD. Welcome to the show, Harvey.
Hey, thank you, Rohit. It's very excited to be here.
Awesome. So, Harvey, you have had a very interesting journey. You started in computer science, and then you later on moved into venture capital, and now you're leading a crypto exchange. What's the most underrated skill that you carried from coding into high stakes investing and leadership?
For me, it's gonna be structured problem solving.
Okay.
So when you're working coding and the tech field, you're trained to break down complex issues into like small testable steps. So in investing and leadership, I think it's the same. So basically, the markets are very noisy, the operations are very complex, and people get emotions, right? So, but if you could just analyze a complex issue and break them down into small pieces with a very good logic behind, and then it will help you to make very, I would say, better long-term decisions. And that's a skill I carried from my tech work into venture capital and now leading LeveX.
Got it. Interesting.
Yeah.
And you've been in the trenches of Web3, and in the last 2 or 3 years, you've seen AI adoption has really gone up, and a lot of people are thinking that AI is much bigger than blockchain. But what's the biggest misconception outsiders have about blockchain adoption today?
It's a very, I would say it's a very deep question we can get into, like with very complex answers. I think they may take another AMA for us to discuss really detailed on this. But today I will use the time and try to answer this question in short manner. So I would say, if you talk about outsiders from the blockchain world, I would say there are different types of outsiders. We can define those outsiders. For example, the first type would be those people that completely don't understand blockchain at all. They never heard about it. Just ordinary people. They might hear this from headlines about like scams or crashes from certain coins, right? So those negative news they hear about, and they have this misconception that just like the movies, like a crypto is a scam, right? So this is the common misconception for those people who don't understand blockchain or don't know about crypto at all, right? And this is one type, and then there's also there are people actually have knowledge in the financial world. They are in the industry, but they are into tech. Like you said, those AI or tech people, they're from a different industry, basically. They may have made their fortune, or they may have their success from before. It's like the OGs, right? So they think they're the best in their field, and they somehow, they maybe look down on crypto, saying this is just one-time phenomenon and it won't last. So this kind of people will have the common misconception that crypto is just a one-time event. It won't sustain, and there won't real-world utilities. But actually, in fact, the recent development of stablecoin actually defeat that, right? So that's the common misconception from this type of person, like the success people from other industry don't really look up on crypto. So, and there's also another kind of outsiders. It's actually within the Web3 ecosystems. Let's say there are BTC maxis, there are Ethereum maxis, there are Solana fans, right? So they all have this kind of a tribalism. They're building fences between each other. They think their own community is going to be the best or the leading standard in the future, and this will create a misconception that there's only one golden standard is going to live, right? So to break those misconceptions, I would say there should be enough spaces for all kinds of crypto or Web3 projects, because let's take example for gaming, right? I myself, I play lots of games. I like there's actually on-chain games you can earn, right? But I wouldn't really relate too much BTCs to those kind of on-chain games, because BTC is slow, right? But BTC has its own value. It stores value, and it's good for financial institutions and all this. It's like a holding like gold, right? So, but for others, for the gamers, and maybe Solana, maybe Ethereum, because you have NFTs, you can build on Ethereum, they are fast, right? So this is going to be more adaptable to gaming. So that's going to break the misconceptions within those groups of people saying, like there's only one standard, but it's not, right? So everybody would have their room to grow. And that's how I understand those questions. And I hope that answers your questions too. This is a long story, yeah.
Yeah. No, absolutely. I think, I don't know if many listeners know this. I started off my career as a stockbroker. So I was trading into derivatives and futures and options, and I was a big fan of Warren Buffett, and he said that, stay away from derivatives, but and I was not a great trader, right? But in spot and future markets, what are some of the non-obvious factors that separate a winning trader from everyone else?
Yeah, then you mentioned yourself, you're experienced in trading as well, you're in the industry. Myself, I had very good trading industry as well, because when I was working in the tech company, actually I invested in Apple and Google shares earlier when I was working. Nice. So I had quite good knowledge on this as well. But you said about non-obvious factors. But the obvious factor everybody knows, right? So it's all the tools, the Bloomberg tools you use, and then analyze the market, and you have your risk management, all this kind of stuff. But non-obvious factor, I would say, is very important. Also from the psychological part, right? So a success trader, and they would have a plan and go into the market and with all these tools and everything they have prepared, but sometimes the market proves them wrong, right? So you got to have the psychological readiness to accept yourself is wrong, and just sometimes just stop loss, and if you keep losing, you may just stay out of the market for a while, right? Just get yourself recouped and re-energized. And at the same time, there's also another part of this, is that if the market is actually going to the direction you're actually betting on, and you have all these tools and analysis, your own system actually proves that you're right, you should stick to it. And that's another side of psychological part. So become a successful trader. And myself, I can take example is that, like I said, I bought those shares early on, but and during the financial crisis, and because everybody is scared, right? So we sold those positions. We didn't really hold it or believe what we should believe, right? So if I hold my Apple shares, I had 30,000 Apple shares at the time. Wow. And if I hold it till now, plus all these dividends and then stock splitting, it's going to be worth like a fortune. But that's actually, I think, it's the non-obvious factor actually prove you are a very successful trader. Yeah.
Right, and the asset tokenization is projected to hit $16 trillion by 2030. So what do you think are the biggest bottlenecks which is coming to coming in the way of becoming that a reality?
Well, it's very hot topic right now. It's the asset tokenization. So one type of asset tokenization could be the recently making the headlines is the Robinhood, like tokenizing all the stocks and trying to make them tradable 24-hour on chain, right? But in reality, I think asset tokenization is only at its earliest stage, and I think the bottleneck to stop it from being more popular, being more flourish, is that there's so many standards out there, and most people actually don't understand. Like we mentioned before, some people don't even know too much about the blockchain technology. So I think the first bottleneck will be the educational materials and to teach people to understand what asset tokenization is, so let them feel more comfortable, right? So that's then people start when people start looking into it, the industry will gonna be more popular, right? So people gonna be learning more about it. But at the same time, once you get people interested, you would also need a standard, right? So or some kind of regulation or framework is like the recent stablecoin Genius Act, right? So you gotta have like a standard to actually tell the institutions how to standardize an asset tokenization in different areas. So once you have those, and the asset tokenization is gonna be more streamlined and it's more trustworthy and more regulated. It's going to keep the investors safe. So once you have both, then you have you eventually you need a platform. For example, like Robinhood or like us, like LeveX. We have a platform in the exchange, right? So we want to actually give the investors more access to a better, I would say, better selections of some tokenized assets, so they can choose from or invest. So once you have all those three parts, I think it's going to be asset tokenization is going to become growing astonishingly fast, right? So that's my understanding. Yeah.
Got it. Interesting.
Yeah, yeah.
And it's been a recent journey for you to get into LeveX. But when you think about your journey, what's the most high leverage decision that you've said that has set the company in its current trajectory right now?
Yes. So recalling the journey at LeveX, I would only say successful and unique.
Yeah.
So being saying a little bit precise is that successful. Well, we had so from my background, I have done work in the tech field, programming. I did the venture capital in China for over 10 years. So my background has the combinations of both understanding the tech and the market, and so I was able to form a very strong team in a very short time period, and we get LeveX up and running online, and that's myself I see is a great success. But at the same time, we want to make ourselves unique, and so when we develop LeveX, we focus more on the features, on the experience, rather than giving out just like more bonuses to lure people in, right? So we focused on our so we built our platform a little bit different than others. So we had the focus on our community side, or we call it exclusive content on our platform. So we have a section on our platform where would allow our affiliates to post their exclusive content about the market, about a certain coin, and they will get into their followers to actually follow them real time and saw their trades live. And it's very good place where traders can exchange ideas and communicate with each other. That's one part. And also we developed a very advanced trading tool called multi-trade. It's also different than the traditional exchange. So which that put in simple will allow user to do trading on one single trading pair with multiple leverage and multiple positions. So it's quite different than what the other exchange is doing. So that makes us unique. So that answers the journey part of the question. But also you're asking, what's the high leverage decisions we made?
Right.
I would say it depends on how we understand high leverage means, right? So if you mean high leverage decisions will has a high risk but higher reward ratios, I would say at LeveX we are in the industry is already very volatile. We didn't want to put ourselves in any danger. We never really made any high risk decisions.
Right.
But if your question is about like if we made a decision which we had a small investment but came out with a way better result, and we did make those kind of decisions. One of those like decisions we made, we were very proud of or very feeling very good about is that we used a small amount of investment. We acquired a core tech team. The tech team has background built from traditional banking systems, and they have been with other big exchanges as well. And after we acquired this tech team, they helped us develop the core features in our platform. I think that's the best decisions we made while we're building LeveX.
Interesting. And before the call, we did talk about that you did your MBA from INSEAD, but after that, you spent a decade in China in the VC world, right? So, what's the one investing principle which you use that most Western investors overlook, and is it quite different?
Yeah, I think in China it's very. I would say that the Chinese market is very fast-paced, or it's a massive market, right? So when you're selecting projects, you can use your traditional valuation method, like the Western world using, like you can do financial analysis, you can gather data, but it's I think at times it all comes down to when we're making a decision, you have your own method, like you mentioned. So one thing I look more into in a company is the I would say the entrepreneurial history about the founder and the products developments about this company. Like how, let's say, a more detail is like I would look into the founder's history and how many times he has failed before. Like if we've never had a failure and he's fresh out of like another big tech giant, like maybe he worked for Google or worked for Microsoft before and never experienced a failure and never had any entrepreneurship experience at all, I would be very hesitant to invest because in the Chinese market, people what often does is that I see lots of founders, they have great instincts about innovation, but they will test their ideas very frequently. They put out their products very fast in the market and let the market do stress testing on their products. And if they fails, they come back again. They reset and come back again. So that's gonna make their product evolve during this development. So for example, for the Chinese like EV market, right? It's very competitive. There's lots of competitors there, and many manufacturers actually is eager to put out their products in the market and test them, and they get feedbacks from users, and they innovate and then deploy again, and then they test them again, right? So that's how the EV car companies it's actually become very I would say competitive even among the world. That's how I see it, right? So I did had the opportunity to invest some of the EV industry as well. But at the same time, it's not only that. Even if I want to invest in a company in China, I would look at least the product has iterations like for at least 3 times. And why 3? I like the number because I mentioned that I invested in Google, in Apple, and I remember when iPhone came out. Even
Yeah.
iPhone takes 3 generations. Even like I remember iPhone 3DS. That's where iPhone took off, right? So that's my principle. I will wait for at least 3 generations to invest in the product or invest the founder. Yeah, after he has some failure experience.
Interesting, interesting. And
Yeah,
and,
yeah.
and if you're advising a startup on going global, there are a lot of Chinese and Indian startups who once have had their product market fit in their respective countries would want to look into the US market. What's the first mistake you would warn them about, and what would be your strategy on how to go global?
Uh, if I think through about this question, I think the first thing I would tell them is probably sit back and look and maybe wait a little bit longer. Because oftentimes I invest in many projects in China. I have seen many founders became overconfident or has too much confidence about their products. They think like oftentimes, in fact, they are actually what they think they are is actually at least 6 months ahead the actual fact. So by that means that it would take another 6 months to actually get where they think they are right now, right? So in that sense, I would advise them to wait and take some time and just look at their local market a little bit more because, China is a huge market, and especially startups in China. If your product isn't really worked out or became saturated in the Chinese local market, why so eager to go global, right? From my experience, there's 2 types of people really eager to go global, and one is that they actually didn't do well in local market, but they think they're looking for a bigger market globally could increase their market share or increase their revenues, but oftentimes it's gonna drag them into a deeper hole because they didn't even test their products locally. And this is one type. And the other type is that they has been very successful locally, and they are taking the opportunity to making the brand globally recognized. And this type, like I said, if after careful considerations, they could have a well-planned global expansion, like marketing strategies. But at the same time, they're going to be very careful with their spendings. At the same time, they need to structure their human resource very well, find the right person in the right place. So that would help them in the long run. So I hope that answers your question. Yeah.
Yeah, no, absolutely.
Yeah.
And then I've seen there's been a sea of short-lived crypto projects. What signals would you look at to tell a Web3 startup is going to actually survive the next startup market cycle or not?
Yeah, well, this has been on and off for a couple cycles, I would say. During the last bull market, it's 2017, 18, I think there's many projects. They are they're raising money, they're doing ICOs, IDOs. It's just purely based on white paper, right? So there's 2 signals I would say for myself is that I need you need real people and real cash flow. So by real people means that you don't just have like like a cartoon character names on the white paper. You need an actual person who had a successful business histories before and has a very good CV experience in the industry. He's actually know how to build a products can be utilized or in the market, right? So that will lead to the second part. So if you can build a product everybody using, and it can generate cash flows, and at the same time during maybe a market downturn, and then your cash flow can keep to be positive, or you have enough cash to burn based on a limited negative cash flow, but that would keep your company last, right? So that's two signals I'm looking at: real people and real cash flow.
Got it. And especially, since you work with a lot of VCs, are limited partners focused on brand over performance when it comes to, venture capital? Would they look into, invest more into the Sequoias and the bigger firms rather than performance?
Well, I think this question I need to answer back is that you're saying it's the limited partners, so it's the investors to the funds, right? So they're looking for more brands. Okay, so that is very from my own experience is that so limited partners going after the branded venture capital fund is because the branded fund would have more access to hot projects, or I would say more star projects they would have access to, and the LPs sometimes they want to get into those projects. They need to go after the branded funds, but when everybody's doing that, we're gonna they're gonna leave a blind spot in the industry, because there's some of those the performance we actually is not only coming from the branded fund. It's actually coming from I would say the ability to be able to identifying star projects early, and have then have the access to actually get into at the right time. So in that sense, I would say persistence and ability to identify a project or an investment opportunity early is the key to performance rather than the brand. So it's a little bit combination of both. It's good for the LPs.
Got it. And especially, in the venture capital world, they always say that we are founder friendly, so those terms are really popular, but you've had that instances where, the founders haven't performed, that they need to be, removed by the board members, by the investors. But when do they actually backfire for both investors and companies? Any experiences that you shared before?
Yeah, of course. This is one I have seen so many. So you mean like a founder-friendly terms? Because so in my experience, when I was doing VCs in China, we do have very strict terms. So because founder oftentimes, I think one time like you want to work with them and give them enough room to be innovative, but at the same time, I think for startups in general, because they probably lack of experience in financial controls, and they probably less experience in human resource or management. So those are the types when a VC step into a company, normally they look into. So as a minority investor, for VC to invest in those companies, the requirement we normally ask is that we need to have financial transparency or a final say on the company's financial decision or essential hires. And also we would have terms to actually limit the founders I would say, steps of increasing the spendings. So I had a personal experience because we in fact invested in one of the very famous music industry agency in China. They hold lots of these musical rights in China. They supposed to be making lots of money because the music industry was flourishing for the last 15-20 years, right? But we find this company, they they are making headlines all the time, but when I look at their financial reports, they got this very large spending, uncontrolled spending on their balance sheet. And so then we dig into a little bit more, we find false movement on the founder. So that's where we actually executed our power to actually remove him and get back on track. And then later on, we made a great profit and sold the company to a listed company in China. So that's where we actually, if we didn't do it, so both the company and our investment is gonna go down, right? So that's when it's gonna backfire. But we actually executed our power on the investment terms. We removed the CEO and we got the company back on track. And that tells us sometimes we need more discipline and control from like a venture capital point of view. Is way better, yeah, for the company and the investor, yeah.
Yeah.
Yeah, I hope that answers the question.
Yeah, absolutely. And if you look at decentralized finance has been like a gold mine and a graveyard for investors. So where do you see that sustainable returns in that space going forward?
DeFi has been very hot topic. Even like in the last cycle, we had a DeFi summer, and now I think some of the star projects still out there, like the AAVE, AAVE, right? So basically, my thoughts on this is that you got to have a protocol or a DeFi protocol is actually tied into somehow to the traditional financial world, where you can actually generating yields. For example, maybe from payments, for credit or for lending. So AAVE is for lending, and also for maybe a trade file or actually a real world asset, right? So RWAs. So those are the real assets can actually generate economic benefits to the DeFi participants. So that's, I think, would actually be the gold mine and will sustain. So in the future, and I hope that answers the question.
Yeah, absolutely. And cryptos had that bull run right now, but during downturn in digital asset markets, what's the most strategic move that a crypto company can make, which which helps either an exchange or a trader reduce the reduce the risk?
Absolutely. I think there's a saying is that during the bull market, it's good for investing in the cryptos or participate in a trading market, just like do crypto trading, right? Because in the bull market, people are very active. But in a market downturn, it's a good to build product, because during a downturn you need to actually lower the cost and focus more on the product itself, and it's going to bring more features to the users. That's how you attract more users, right? And also in the downturn, you would have more I would say you have more options on talents. Is the cost also have been lower to building actually the foundation of the team for the future growth. So if you focus on your cost, keep the cost down, and focusing on building the team, building the product in the downturn. So once the next bull market cycle hits, and your project is gonna take off.
Got it. And
Yeah.
especially when it comes to crypto, there could be wild swings, right? But how do you keep your team focused and motivated when your industry could go, 20% down in a week?
Well, yeah, 20% up and downs in the week in the industry is actually is not unnormal, I would say, because a crypto industry is a very volatile industry oftentimes.
Yeah.
But volatility, but let's take a little step back. So volatility is not necessarily to be a bad thing for the industry, especially for the crypto exchanges, right? Because you see, volatility will bring more people attention, and more people will actually participate in trading, which is going to increase the volume, which is going to be good for the exchange and the stock brokers. And at the same time, there's often these fairy tales or the success stories of billionaires. They made their millions from the volatility. So they were a very small investor. They took the ride and then they took the risk and they became millionaire. So volatility actually makes millionaires too. So from our side, we understand the market itself could be volatile, but ourselves we keep focusing on building our products. So we tell our team we have a long-term shared view. At the same time, we value the input of all our team members. So we tie our future growth to our group teamwork. So basically, we appreciate every member of the team and absorb their ideas and give all the access possible for them to innovate. So that together we keep ourselves aligned in the long run, and that way we can get rid of all the noise about the market. And at the same time, when the market really moving fast and volume increases, as exchange, we actually make more value for the customers as well. So
Right, correct.
yeah,
And,
yeah.
and Harvey, if you had like $10 million to deploy today, and you have to split between venture capital, where you spend a decade, and crypto, where would you put it, and why, and how would that split be?
Uh, if today, because we are already at, I would say, probably the later stage of a bull cycle. I would say for the crypto industry in general, or even the stock market in general, because oftentimes when the bull market at its heights, if you give me like $10 million that if you want me to split, on the venture capital side, I would be a little bit careful because it depends, right? So how do you say it? Like for the VC industries, it's similar to the wineries. They call it vintage years, right? So there's those multi-stage VCs. They will have like different series of funds, and some of the funds has very astonishing performance. Some is really bad. So it depends on the vintages. How to define the vintages? Because the market cycle, right? So right now, if we are at the height of the bull cycle, and if we get into the venture capital markets, all the projects are very high value, have high valuation. And if we get in now, and if we get a market down cycle, and that vintage series of the VC fund will have really bad performance. So right now, if I want to split, I would probably only give 20% of that $10 million to venture capital, and maybe just stick to AI or stick to some of these hot topics in the market. Just keep myself involved in that industry. At the same time, I will say that 80% maybe still just going with the winners during this market. Like for example, I can invest in some of the like a Bitcoin, Ethereum's, because Ethereum is still at the early stage of this its technology adoption from the traditional financial side. So I think it's still got chances we can go higher from here. But I would keep that like investment very, I would say, agile, and I'm ready to get out when the market turn against me. So that's my decision right now. So
Got it, got it.
yeah.
Javier, I quickly want to do the top three. What's your favorite business book?
Favorite business book, like everybody read lots of those Rich Dad Old Dad kind of books, and I read so many of those trading psychology or kind of books. But I think one book really impacted me is it's a book called Tao on Business. It's actually wrote by Jack Ma, is the founder of Alibaba.
Yeah.
So in this book, he talked about uh, the natural series about building a company. So you gotta have to have a long-term vision. It's not just chasing the money, and you need to build values for your community. So be adaptive to when the market changes, right? So that's his theory, and also precisely in his book he mentioned a couple of things. It's actually resides with me very well. Is that he says something about seizing opportunities when it's early. So if I turn back and see is that when I invest in Apple and Google shares early, or I invest in Bitcoin early, it really give me the edge over the others, right? So that's one thing he told me. Also, he mentioned that you want to build a strong team with a very good culture. That's what we have been doing now with LeveX. We have a very strong background teams from various industry, and at the same time we have a culture that we put our users at the center of our business goals, and we want to increase the user experience and build future features around the traders, and make ourselves success in that way. And also, Jack Ma mentioned that you want compete by differentiating yourself, not by like a press cutting or become bigger or become a monopoly. Although his company become really big, but I think the theory is that so you want to compete with your own strengths, not just trying to follow others, right? So at LeveX, what we do is that we looked at the market, and we don't want to compete with others on the marketing strategies. Although we have welcome bonus or this kind everybody's already have, but on top of that, we put more focus on differentiate ourselves by implementing exclusive content areas for our users. At the same time, we're providing more trading tools like multi-trades, and we put more attention on securities and make sure our users' assets are very safe on our platform. So those are the kind of things I learned from that book.
Got it. Interesting. And
Yeah.
and what do you have any favorite online tools? Example: Gmail, Slack, Zoom, ChatGPT. Anything other than LeveX?
Well, of course, we in this modern world, I think to become successful in a business, and you got to have to use the all these business tools to make your business more efficient, right?
Yeah.
So basically, we use for our projects we use Slack. So we have our different Slack groups divided by different department. So everybody would be able to keep up to speed with everything each department is going on. Everyone need to be involved, and we have a separate group. So Slack is very good. I would say tools, management tools we use, and also I have also used a Trello. It's a similar idea. Trello provide you this tablet views about what's going on, and what's the day-to-day activities need to perform, and keep the project management easier. And
Got it. Interesting. And if you could go back in the time when you started working for LeveX, or maybe in your venture capital career, what is the one thing you would have done differently?
when we started LeveX, well, I could have, I think when we go back, if we want to do it again, we would have to put more investment into tech teams as well, because like I said, the tech team really did give us the greatest returns. At the same time, I think the focus will be different. So at that time, uh, we we came up with these ideas of building, I would say, like a uh, socialized trading platform. And but we for some reason we didn't really put all our efforts on building a public social platform. Instead, we built an exclusive content platform only for the affiliates. But if we could done it again, we actually had this idea earlier than Binance Square. So if we have done it again, we would become the first one, would have
Yeah, absolutely. And Harvey, I was just for listeners who would want to know, what's the best way people can reach out to you and know more about LeveX? Okay. Got it. Harvey, thank you so much for taking your time and speaking to us. I really enjoyed my conversation with you. Yeah, sure. Thank you.